protect 23 million Etisalat subscribers and hold investors' confidence steady in the telecom operator. Etisalat is now moving on as a going concern. Details of that you have from us in the next couple of days. Meantime, thank you, but no thanks. That's what the Association of Distribution Companies called Discos in Nigeria says. 3 weeks ago, the Nigerian government, via the Fashola's Ministry of Power, Works and Housing, announced 701 billion naira power sector intervention fund. But the Discos now says, well, thank you for this money, but no thank you as well, because they want a more holistic intervention of the government. And they said in an editorial release today in some of the newspapers that the 701 billion naira was not, it was just a handshake, but it should be returned to the government. And that means they want cost-reflective electricity pricing. In simple language, they want prices of electricity to go up. That's what the Discos placed out in full-page advertorial this morning. In case you missed it, you may want to read that in the dailies. Meantime, one of the insurance companies listed on our market, Linkage Assurance PLC, says, quote today, a probable delay in the filing of its 2016 audited accounts with the Nigerian Stock Exchange and other regulators due to the delay of accounts approval regarding private company in which Linkage Assurance holds unquoted shares, accounting for over 75% of its investment portfolio. That's also on the street Monday morning, starting your new business week. Now we'll do a quick review of the market. We just finished. Look at the stock market. We're up 1%, 0.9 to be precise, in the week we just finished. In terms of volume, the market was down by 26.23%. In value terms, we finished the week 9.19%, but not quite bad. Look at the figure, 12.46 billion shares. Quite an aggressive trading week. Now check through the sectoral analysis, and just in summary, you see the 5 main sectors of the market. 4 in red, only 1 in the green. That's the consumer goods, the industrial goods, the banking, the insurance, and the oil and gas were all negative. We'll talk to the oil and gas segment of the market in part 2 of the program, and you will want to hear more when we track the big 7 listed on our market. Look at the NASD OTC market where you have unlisted securities index. That's just a very slight 0.1% was what the unlisted securities index finished off at the NASD on Friday. The market, very sluggish. 8 deals, 62,400 shares for 5.31 million naira. But the fixed income market, secondary window, via the FMDQ OTC, was quite aggressive. Check through these 2 markets, FGN bonds and the treasury bills. The FGN bonds, quite aggressive by when we finished Friday. 63 deals, 41.98, very most active, 36 billion naira in just 4 deals for the paper maturing 27 January 2022. Flip that over and take a look at the summary for that space in the week we finished. Now, treasury bills was quite more aggressive, more bullish, 144.8 billion naira, and you can see the top 4 in terms of volume and value. That's what you call the value and the deals, and you can see the discount high in the second column and the tenor of those papers in the first column. So let's get a bit of a sense of the market for the week we just finished. Let's turn to Chukwuma Anyanwu to give us about 2-3 minutes of his business time this morning. Market time at this. He's the head of research at GTI Securities. Chukwuma, good morning. Thanks for coming through.
Thanks, Bosin, for having me. Good morning.
Time is money. Time is money. So we apologize for holding you. You need to do early trades. So you need to get back in to see how the market is looking. Give us a sense of the trading week we just finished from the equity side of things.
Yes, you clearly pointed out the major things. We saw that only one segment or sector in the market closed in the green, and that was largely because before now we've had very negative sentiments around consumer goods, and it's not far-fetched. A lot of the consumer goods players were very hard hit by foreign exchange element of their input costs. So we saw pressured bottom lines, and that resulted in a lot of very bearish sentiments towards our sector. The other ones experienced quite some movement, both upwards and downwards. It was more active. Investors thought there were more opportunities for bargain hunting at those places. But this recently concluded week, I think the bearish sentiments were enough, and a lot of people began to see value in consumer goods, and that was why we saw some more interest. And also, judging by the fact that we saw some decent numbers from some of the players that not exceptionally brilliant, but we saw Nestle pay some dividends recently and declared some dividend recently, and so it brought a lot of investor interest back into that segment, and that's what we largely saw. It's largely clearly boasting that we still have mostly retail players in the market, because it's clear that they are just looking for bargain hunting opportunities. So what we have actually been waiting for is a more clear direction from the macroeconomic angle, so that it can filter into how institutional investors begin to come back into the market, and then we can see sustainable growth.
Yeah, but are you looking at, for the current week, are you looking at more earnings, still a lot of earnings still hanging up there that haven't really come down to the market? And we're almost rounding off the month of March. We're just about midway into the third month of the first quarter, and we haven't seen a lot of numbers from the banks, and then including the big boys in the oil and gas space.
Yes, our expectations are still largely looking towards the oil and gas. We think by the time a lot of them begin to talk with their numbers for 2016, we will see some improved activities. Hopefully, if that is this week, then of course it will set the tone for market activities for this week. But for the banking, I think even for the consumer goods space, for me, I think I've seen as much as I want to. For the other ones, I'm not very, very optimistic that I would be impressed if I see better than expected earnings from the remaining tier 1 banks that haven't released. But for the ones that have released, I think for me, I think I've zoned out from the banking space, and I'm just focusing more on the oil and gas space for what I think will drive the market for this week. So yeah, we're expecting that when the oil and gas big boys, like you pointed out, begin to talk for this week, I think that will set the tone for the market performance.
Chukwumanya, thank you very much for weighing in on that conversation this morning from GTI Security. We'll be back after the break. We'll have a bit of the markets to chew, and then we can let you into the world of mining. That's coming next.